Thanks, Mark. And good morning, everyone. It's Friday, looking fine outside. And final day of the week, or the so-called week as we used to have. So looking forward to session. Just going to hand over to the panel to each introduce themselves. We've got four key kind of buckets of areas that we want to focus on in this morning's webinar. One around changing business banking expectations. Secondly, around mobile and the rise of that. Third, around traditional banks and how they digitise. And then finally, the big question, where next for banking over the next 5 years? But I'll hand over first to Jason Maude, just to introduce himself, and then if we pass over to the other panellists, please.
Fantastic. Hi, good morning. My name is Jason Maude, and I am the Chief Technology Advocate at Starling Bank, which means I go around and explain Starling Bank's technology and how we've managed to be so successful and the secrets behind that.
Thanks, Jason. Ritesh?
Hi, good morning, everyone. It's Ritesh Jain. I'm a former Global Head of Delivery for Digital Technology Foundation at HSBC, and prior to that, I come from a finance background where I was building the future of payments. So yes, I'm a technologist and I am a tech enthusiast.
Thanks, Ritesh. Over to Marjan from the amazing Ripple.
Yes, hello everybody. Happy to be part of this panel. Marjan Delatinne, Global Head of Banking at Ripple. I'm spending my time and interacting with banks to make sure that they understand the value of Ripple and blockchain in general.
Thanks, Marjan. And then to Janet from Microsoft.
Morning, everyone. So yeah, Janet from Microsoft. I'm the industry lead across financial services for Microsoft in the UK. I'm engaged with a lot of financial services businesses around how they progress their digital transformation. I'm a banker by background and a non-technologist, but really excited in the change that's going on in the industry.
Thanks, Janet. And then finally, just to introduce myself properly, so Anton Ruddenklau. I look after digital innovation for our firm in the UK for financial services. I co-lead our fintech practice globally. And I am a young millennial, obviously, so I'm representing the younger folk on the panel today. So let's kick off, because I think this is a really interesting time as we're sort of, a number of weeks into COVID. And there are a lot of, sort of reinvention of the world conversations happening right now, but specifically banking is right in the sort of front and center of public focus right now. So Jason, over to Starling, what's your view on banking expectations, how they've changed? Or maybe you might say from Starling, how they continue to be what Starling predicted.
Yeah. I'm not really sure that I would go as far as to say that Starling has successfully predicted what they're going to be, but how they've changed is that now consumers expect banks to provide more than just going to them and saying, "Oh, if you deposit money with us, you'll get this rate," or you can take out a mortgage with us at this rate. And that's it. And, merely competing with each other on the rates or the levels of customer service, say, and those being the only things. Customers really expect banks now to provide them with tools that they can use to help them live a healthy financial life. Things like features like card freezing, for example, or being able to divide your account up into separate savings pots to allow you to save money more easily. Or, one of the new features that Starling has just launched, which is spending spaces, which allows you to connect up a card to a small pot of money within your account so that you can give that card to someone who's doing shopping for you, for example. So all of these new features are what customers are more and more expecting. They're expecting more functionality out of their banking capability and their financial capability. And I think that those who are able to provide them with this increased level of functionality will go ahead, and those who aren't will be left behind.
Thanks, Jason. And just compare and contrast that, Ritesh, from your experience at the large red bank.
So the customer expectations have changed from the bank. Now we are dealing with the customers who are mainly looking after who are experienced with using like services like Amazon, Uber, on-click, on-demand services. So as Jason has rightly said, it's the market for the incumbent or the challengers. Whoever can provide the customer needs, the better UX, the better services, integrated services, not only the account services, who can provide a good financial services overall, and they are going to lead the future of the bank.
Okay. And Janet, Microsoft, obviously you're a large enterprise software provider, got a good view across the market. Really unfair question to you. We look at what's happening with lending and guarantees for SMEs right now. Mm-hmm. Customers have a clear expectation they want to run a business, yet the large banks are struggling to provide the service. Do you see expectations heightened now because of the Amazon or Google experiences? Are they unfair on banks?
I think it's an interesting point, actually, and I think it comes back to, well, two things. One is, yes, absolutely, their expectations are changing, and I think this will be even more heightened where people and ultimately in a position where they've had a business that they've built up for a lifetime, and they really are relying upon these brands that they've put a lot of trust in over a long period of time. So I think I think this point in time will heighten that trust debate, because there's been a discussion in the market, hasn't there, around actually people are using challengers, but there's still a lot of trust in the incumbent brands that have been around for a long time. And I think situations like this could see that balance instigate a sort of further move to some of these new and challenger experiences.
Okay, thanks, Janet. And we move to Marjan, because obviously a big focus of the distributed ledger blockchain team is all around trust and verification, all that sort of good stuff. How is the blockchain community or the service providers actually supported the move to have more kind of counterparty trust while we're in the middle of a crisis, or do you think its time is yet to come?
Well, probably already starting with the experience. I think when we are talking about expectations, we are talking about experience. And when you look at the consumer side, as a human being, our brain is very much conditioned by good experience, and we'll want to replicate that. So clearly, people want to and expect to have a goods and services that are instant and reliable. And clearly, I think when you look at this angle, examples like Uber is becoming very interesting, because you have an experience of just tapping once on your telephone, ordering a taxi and getting to your destination. Obviously, our use case as a blockchain and Ripple is around cross-border payments. So obviously, we would expect the same, let's say, experience in the space of the cross-border, which is very important, especially with e-commerce and international, let's say, activities. So what our contribution actually to this digital era is building an infrastructure that helps the financial institution to get closer to this reality of instantly and convenience and easiness, actually. And I think when we look at why we are doing that, in fact, I think we had a previous conversation about what we are trying to resolve, actually, or solve as an issue. Is not using blockchain for blockchain or other fancy stuff. Is really what is the problem. And when you look at the age infrastructure that it is in place today in order to transport or transfer money around the world, this is very close to a postal system. Yes, you are right. There is a trust established between members of these systems, but you still have a lot of inefficiencies in terms of the cost, that it is costly, it is unreliable because the data and the payments are not happening at the same time, and it is slow when you get to the cross-border space. So clearly, our customer base realize and recognize these inefficiencies, and they look at the blockchain as a technology that can inherently diminish the operational cost and speed up the scale up for them to bring new services in competition with the established organization. And that's what we are seeing. We are seeing a network that it is built it's probably easier for digital savvy or let's say native digital organizations, but the money is actually exchanged real time. You see many, regional banks that are joining this network, and they are actually using and sending money, and they are extending that to the local markets in Thailand, in Vietnam, in Malaysia. So this is of course the trust. The trust is very important, and I think being a part of the new technology, of course, you need to ensure that your solution is fully understood. But blockchain is a trust in a trustless world. So as you get closer to that, you understand all the features that can help you to build a stronger trust around that.
Thank you. I think UK finance talk a lot around trust and the fact that banking institutions have much more of a trust factor with the safe storage of data than, say, a Google or an Amazon. I'm just wondering, Jason from Starling, obviously you've built non-legacy technology, modern, fast, efficient, agile, all those sorts of good things. How do you think around the better use and custodianship of customer data to get back to those needs and issues that you mentioned on customers earlier on?
Yes, so I think that the custodianship of customer data is obviously one of the biggest responsibilities placed upon a bank. I think financial data is possibly second only to medical data as, you know, one of those things that customers really want kept safe and secure. I think that one of the key things about customer data that we really have to concentrate on is not just making sure that it's kept safe in the sense of being locked away in a vault, but that also it's accessible. Customer data, I think, more and more is a lot like a customer's money from the bank's point of view, or should be like a customer's money, in the sense that you need to keep it safe. Obviously, you can't let people come in and steal it, but you also need to be able to give the customer access to it. Many banks have taken the attitude that a customer's data is something that they lock away for themselves and use for themselves, but don't actually let the customer have, you know, the customer have access to it. And I think one of the big things that fintechs and challenger banks have come along and done is said, no, a customer's data is your data. You know, it is the data of the customer. The customer should be able to access it, should be able to see it, and should be able to take that data and give it away, give it to someone else who they want to provide them with a service. So they should be able to have the data portability to move that data around in a safe and secure way, as they can do with their money. And I think that is an important change that has happened recently, and one that I hope will accelerate.
Thanks, Jason. Ritesh, quite a lot of chatter on the chat here around whether branches are valid anymore. We know from stats from the Link network, for example, ATM usage massively down, and anyone who provides ATM networks is probably financially hurting right now. Branches themselves somewhat challenged. Is the branch going to be valid anymore? What we've always talked about for the last few years, but now we should probably get on with an answer. What do you think, Ritesh?
So yes, we are having these discussions all over for a long time whether the branches are going to be out of date. Yes, the traditional banks have started working on the virtual branches, right, and the more digital branches. But at the same time, we are looking at the banked community. So now I look at it from different perspective, and we are looking at the bank customer, and we have got a great number of customers who are unbanked and underbanked, right? So yes, from a digital savvy perspective or digital savvy customer, the branches are going to be less relevant, but still customers are more relying on the personal experiences as well as human experience and human advice. So if the banks can provide the similar sort of experience, or the traditional or challenger bank, I wouldn't segregate between two, whoever can provide the same sort of experience virtually and digitally to the customers, then yes, the branches are going to be less relevant over the period of time. Now, However, when we talk about, as I mentioned earlier, about underbanked and unbanked, we have a huge community which is unbanked. And that is, if we start thinking just from the digital savvy perspective, that is not going to work. Because obviously, yes, the mobile has a significant reach, but it has got a limitation. So yes, the branches are not going to be completely irrelevant for the banking. So I would still see a great relevance of the branches and the physical banks for unbanked and underbanked customers.
And Janet, from a Microsoft perspective, what's your views on both vulnerable inclusion type issues like Ritesh is raising, but the wider issue of accessibility to financial services? How do you see it?
Yeah, so I think it's a really valid point, Ritesh, around there will still need to be provision for the unbanked and the underbanked parts of society. I think the interesting thing will be looking at how technology can be the solution to some of that. And we work with one of the partners we work with called Sign Leaders, sort of British Sign Language of bank documentation to give access to deaf people who historically would need to either come into branch or have hearing assist translation. So there is technological solutions. I think one of the things to think about from an accessibility perspective and how the sector can look at it is thinking about partnerships and actually how can those branches evolve to further serve the community that they're within. I think there's a bigger question at the moment in terms of the future of the high street, what will happen with commercial property, and actually, you know, where can banks partner with other service organisations, and what do those provisions look like? But I think for the foreseeable, there will need to be some sort of physical provision to provide that accessibility across the community.
I'm interested in people's views, maybe Jason, on whether, you know, so Innovate Finance, a fintech body, would argue that there's a lot of fintech firms out there that can support inclusion, and they can do that at a very low growth point, which is good. Their view would be also that there needs to be a base level of commitment from the industry on things that just need to be delivered by every firm. Doesn't necessarily mean that every banking firm needs to have a branch, but some basic things to include people. And we've talked around banking the unbanked for some time, etc.
Yeah.
What's Starling's view on social commitment to the UK, particularly over the next 2 or 3 years where it's going to be hard?
Yeah, I think that there's definitely a need to be able to provide access to as many people as possible to people who, you know, to banking services. It's something that we sort of in our heads, we sort of go, oh, everyone has a bank account. You know, everyone has access to banking services, which is not necessarily true. I would say that on the point of accessibility, I would actually say that if you look at what you need to have, you know, to have in order to have access to a Starling bank account, say, or a bank account from a digital bank, you need a smartphone. What you need in order to get a bank account from one of the incumbent high street banks is access to a bank branch. And I would actually say that many more people have access to a smartphone than they do have access to a bank branch, because bank branches are, incumbent banks are closing branches down. So I actually say that in some ways, digital banks, purely digital banks, are more accessible because we give access to, you know, people who live out in the, you know, the middle of nowhere. Their nearest bank branch is ages and ages away. They can't afford to take an entire day out to drive to, you know, the town where the bank branch is and go in and, you know, have the meeting that they need there in order to open the bank account and then come back again. So actually, you know, and in these days of the situation we're now in with COVID-19, you know, I am somewhat slightly horrified by when I go out, you know, to the shops, walking past banks which have massive queues of people outside them waiting to get into, you know, get their banking services because they can't find those banking services or, you know, enough of those banking services online. So I think that actually, in accessibility terms, accessibility, I think, is much more easily provided online, and there are technical challenges there to provide, banking to people who, for example, are partially sighted or blind, for example, and you need to have appropriate technology to be able to read to them the what's on screen and that sort of thing. But those technical challenges are not insurmountable. They can be overcome. Whereas I think if you rely to a certain extent on a physical presence, whatever that is, then you are going to lower your accessibility quite considerably.
Thanks, Jason. And I guess in hindsight, Jeremy Corbyn, rest in peace, was probably right? That we need access to broadband for all, whether it's free or not, debate, but maybe free. We certainly need to build out our national infrastructure so those people out in the middle of nowhere can use their mobiles and get access to
Oh, yeah, absolutely. And the 5G network, which will hopefully make, the mobile reception more reliable, needs to accelerate as well.
Thank you. So, Ritesh, if you're the sole voice of reason here from the established legacy banking teams, just a little bit of a view then on what the large banks need to do to provide a truly digital offering and accelerate some of the capabilities that we've talked around into market. It feels to me that we've got much more of a social purpose around banking in the crisis right now than ever for commercial customers as well as consumers. How do you think the banks need to really start to move on this much more coherently?
So the banks need to think more rationally and think out of the box in terms of mobile banking is just not a solution for the customer. As Jason said earlier, and we have discussed, customers are more interested in the services, in the integrated full financial services. So bank need to think more from the services perspective rather than just the products. And as we have discussed earlier, that the customers are looking for, the market is going to be like a supermarket for financial services. So the customer they want 24/7 access, they want better user experience, they want best services, and they're not going to tie up with a single bank. So what is going to happen is whoever can provide them the variety of services, and that is going to be truly possible with the changes in the banking sector, which we are looking at as a banking as a service, as well as open banking, and with the partnership with the fintechs and the challenger banks. Because here we are talking about the customer experience. At the same time, we are looking into the whole traditional model of the banking. Because when we start looking into the challenger bank or the digital banks, the cost of customer acquisition is quite significantly higher. While for the traditional bank, that is not the case. Traditional bank, cost of capital is much cheaper in comparison to the challengers and digital banks. Let's not talk about the valuations. I will not get there because we all know that. So yes, when we start thinking about what traditional banks need to do and who is sitting at the right place, whoever can provide an integrated services to the customer, and they will lead the bank of the future. And it's regardless of the traditional bank or the challenger.
Ritesh, I wonder, I think, with the SME lending we've seen and with some of the channel capacity for the large banks being exposed, which, fair enough, this is a crisis, right? We can't have everything for everyone all the time. But if we look at some of the responses from the banks, many of them seem to be throwing more bodies at the situation. I wonder, and maybe this is for you, Janet, has there been true collaboration with fintech or technology firms on a pervasive scale so far, or has it been lip service?
So,
I think, sorry, was that to me or Ritesh?
Go for it, Ritesh.
Sorry. Thanks, Janet.
You go first, Ritesh.
Thanks, Anton. It's mainly, as we know, like if you're talking about on the traditional banks, right, we are talking about a legacy. We are talking about banks who have been standing here for 150, 100 years, right? So obviously they are carrying quite a lot of legacy infrastructure and the capability. Now, as I said, like whoever can move from being archaic silos, and sluggish to agile, safe, and simple, they will lead the future. Because I was part of building an enabling function for the bank of the future. And what it really meant is basically transforming the way bank operates, not only from the channel's perspective, but basically the capacity. And I've experienced in my career and in the recent past, where the banks have built up their capability for their mobile platforms. They have extended their mobile capacity by 4 times in 48 hours. So the technology is not going to be a challenge. And I don't see that as a challenge for whether it's for a challenger bank or for a traditional bank. As I said, traditional banks have got deep pockets and access to all the technology. It's basically, and I rather look at it as a challenger banks are becoming a catalyst for traditional banks to unleash and realize their capability and the power.
So you see Starling, Monzo, Revolut basically giving the legacy banks a bit of a kick.
Yes. And basically it's all about the traditional bank understand the challenge and consider it as a threat and opportunity. Right. And however, it's all about unleashing and unlocking that potential.
So let's just, Janet, I'll come back to you in a moment, but a couple of comments here on Bow, announcements today, JP Morgan, Digital Challenge Bank, etc. Jason, I know you'll have a view, but the large legacy banks, it feels like in some respects they need to eat themselves with new digital startups that they create. What's your views on what they need to do to get it right?
Yeah, sure. So I think that there's a big misconception, this thing that goes around about challenger banks and legacy banks about technology. And when challenger banks first started up, I heard all of the incumbent banks say, or a lot of representatives of the existing banking industry say, well, you won't succeed because regulation will stop you. You'll come across regulation and that'll slow you down. And that turned out not to be true. And then they said, well, you're successful because, you don't have this legacy technology holding you back. And that was a sort of insult wrapped in a compliment, because there was a compliment there. But the insult was, well, once you have been going for a few years, you will have that legacy technology and then you'll be just like us. You'll slow down. And I don't think that's true either, because I think that what's holding the incumbent banks back is not their technology, it's not their infrastructure, it's not what they have, it's their culture. And I don't think it does not matter how much money or how deep pockets they have. What is holding them back is their culture. It's the way they use technology, the way they access technology, the way they view technology and technology change, the view that they have on risk. The way they manage technology is project-based rather than product-based. All of that is what is holding them down. And so I think that what's going to happen is one of a few things to them. Either they're going to collapse because they can't keep up, or they're going to realize that their culture is holding them back and they're going to completely change their culture to be much more like a digital bank. Or they're going to create one of these new spin-off digital banks like Bow, except they're going to keep it going. And then eventually that thing is going to be much more successful than the old incumbent bank. And they're going to go, oh, well, we better switch then. And they might invent some hybrid solution which involves, some bank branches and so on. But by and large, they will migrate to their main offering being an app-based or browser-based offering. That will be the main thing, supported by perhaps physical infrastructure. But I think it's in order to get there, they're not just going to have to throw money at the problem. They're going to have to completely change their culture and the way they use and view technology.
Thanks, Jason. And that leads very nicely to a question to Janet Jones of Microsoft. One of the questions that have come through is around the Gatha and whether this is now the opportunity for Apple Card or the soon-to-be released Google Card or whatever it is to become more pervasive. And maybe building on Jason's point, coming from a different cultural background and mental model for financial services. How do you see the large tech firms playing in this space, and how is that going to pan out? Will they be direct to consumer, or purely infrastructure, or both?
I think it depends on. I think it depends on the tech firm. I guess from a Microsoft perspective, we've been really clear that we won't develop to be a bank and compete with the customers we're serving in the marketplace. I think from the sort of bigger tech platforms and what we see over in Asia as well, I think they will only continue to increase their presence in the financial services marketplace. Now, whether they'll progress to be fully licensed banks, I don't know. But I think that there will continue to be more of a detachment, and we talked about it a bit earlier in the trust concept, but there will be more and more of a detachment from the brand of a bank from a consumer or a business perspective, and the desire for them to be able to facilitate whatever they're looking to achieve, whether it's in their personal or their business financial lives. I think coming back to the culture piece, completely agree with you, Jason. And, I think one of the things that strikes me at the moment is that we're seeing huge acceleration of digital transformation. I think I was saying earlier that Satya came out yesterday and said that we've seen more in the last 2 months than we've seen in the last 2 years, and that's across all of our enterprise customers. But specifically within financial services, I think one of the key factors will be how far back do they want to take it after this crisis. So how far will this sort of agile working, the ability to change at pace and the ability to look at technology as an enabler from a different perspective, how much impact will that have on how they continue to evolve over the coming sort of 12, 24 months? And I think that will be key. And I think that is a cultural question as well.
One more question for you from the Q&A. There's a few comments there around cloud. Does this at long last prove the point that the banks and the regulators need to get off the fence and actually properly invest in cloud infrastructure to support service provision?
I think I think the basic answer is yes, absolutely. I mean, ultimately there aren't the sort of big regulatory blockers, and Jason touched on this. There aren't the regulatory blockers. It is more of a cultural and a risk situation within the sort of big incumbents that has been making that progress ultimately relatively slow within the sector. Financial services are relatively early in their journey to cloud adoption, but yes, we see this as a real a point to accelerate that adoption, because business continuity is where actually it's been thinking about, well, can we just move this service from that location to that location? This being a global crisis has really highlighted that that resiliency needs to come from a different source rather than just different geolocational bases, and cloud ultimately is part of the answer to that. Yes.
Thanks, Janet. Marjan, a couple of questions around central bank digital currencies, crypto, stablecoin, all that cool stuff. Do you see this particular crisis validating the requirement for programmable money, or do you see this still as a slow incline into inevitably blockchain eating the world?
Well, I think that one lesson learned from this crisis or this pandemic is that we can do much better payments. And the way that the system is worked probably is not the most optimal way. Now, there are different layers, of course. And when you are talking about the real consequence of COVID-19 is the fact that the cash is disappearing, or at least is declining in the usage because of the health issues. So if this trend continues and you need to somehow anyway keep the money somewhere, you will, and we see that even probably on banks are going to somehow have some more pressure on them to get to the more digital world. And it's pushing as well banks towards this digital world. So I think, and when you look at all these dimensions, all these angles, then CBDC or the central bank digital currency is probably a representation, a digital representation of the money when we are moving towards digital. And that, at least what we see from central banks, that there is now an interest towards really understanding how this can work and how this could replace. Some markets are more advanced. We see that in France, they have launched a new initiative in terms of experimenting actually the needs, both in the capital market and the cash side. We see that the Bank of England. So I think these trends will continue. Now, again, when these are very much still local oriented, So there are currency and fiat currencies in the local jurisdictions. Now, how this will work in terms of interoperability between each of them in the, let's say, more international worlds, and that's where probably the digital currencies that have, let's say, like XRP can play a role in terms of playing a bridge between, let's say, multiple or different CBDC. But I personally think that these trends will continue and will be reinforced in the coming years.
Thank you. Thank you. Now we've got a few minutes left. I think we'll wrap up on final comments from each of the panelists. The final exam question is the big magic wand. How will banking change over the next 5 years? And just to frame that a little bit, some of the questions in chat coming through is around, whether workplaces, physical workplaces are valid anymore, or do we move to WeWork? That's one. Secondly, comments in around, I think, Jason, your views on culture, talent, skills was really resonated with people. And then the third question is around infrastructure and what needs to change. So when you're thinking, and probably I would add in there product and service is the other one that's missing. Mm-hmm. So we'll start off, Ritesh, with your magic wand. Next 5 or 3 years, what needs to change? How will banking change through the power of digital?
For next 3 to 5 years, the change or transformation that we are going to see, especially I'll agree with Jason in terms of if anybody need to transform or change, it all starts with people, right? But I'll mainly talk about the customer over here. From the customer perspective, it's a seamless in terms of whether we talk about the open banking or the banking as a service or the technology or the cloud adoption, right? From the banking perspective, the banking needs to go more digital. Banking needs to adopt and change their culture and provide the better experience to their customer. From the customer perspective, as I said, it's a seamless to customer, whether you're providing those services by yourself or by partnership. Because even today, there's a significant disparity in the loans. If we just pick up the UK market, that varies from 3% to 1,500% to pay loans. How you are going to fill that gap? Customer is more interested in an integrated financial services, and that's how the change that we are going to see in the next 3 to 5 years in the banking sector through open banking as well as the banking as a service.
Thanks, Ritesh. Jason?
So I think what we're going to see is a big rise in people who are in institutions who are trying to solve problems, who are trying to say, questions like how do we provide banking services to as many people as possible? How do we solve banking services for this specific problem? How do we solve, as Ritesh mentioned, the loan problem from, from various different angles and various different groups of people. So those institutions will grow, and the institutions that will shrink are the ones that are focused on solutions, the ones who are simply asking repetitive questions about how can we increase personalization or AI or use of blockchain without knowing why they want to use those tools and what the use of those tools is for. I think that the how question of how the big incumbent institutions change their culture is they really have to ask themselves what they want to do and what they want to be providing. And if they want to be providing the sort of digital experience, the technical experience to customers, they have to really transform themselves to provide that properly, which means becoming agile. And becoming agile doesn't mean some sort of like wishy-washy, gentle type of thing. Becoming agile is really quite difficult, and it involves a lot of difficult decisions and conversations. It also means banks having a bonfire of their procedures. So, taking all of their 700-page procedure documents that they've used to keep themselves safe and make themselves feel comfortable that they are following the, almost holy procedures, the holy religious procedures. We have followed the 700 pages in the holy book, and therefore we shall be protected from all of the regulators forever and ever, amen. And taking that book and burning it and saying, no, we need to focus on what the customers need and how we best serve the customers. And that is, you know, that is going to be difficult and tough for them, and not all of them or all of the people in them are going to survive it.
Thanks, Jason. But I'm worried about your advocacy of global warming by if we did that, there'll be definitely a carbon emission problem here in London with the banks. Marjan, your views on the future of banking?
Well, the future of banking, or the future of payment, I would say, because banking is really, payment is a core, at least in this subject, I would say is, from our perspective, is the internet of value. I think these processes, we call it agile or whatever is behind, needs to get closer to the way that the information is processed today. I think we are still separating these two level of experience. The closer they get together, the more integrated the systems will be. And I think now, really putting my Ripple hat, I would say the digital assets are a new instrument, and they bring a series of value in terms of one of the, at least in the really cross-border space, one of the elements that it is very heavily impacting the cost, which is the liquidity management. And there are ways that you can use these instruments in improving actually the way that the liquidity is happening, so you can source on-demand liquidity. So I would say yes. And to be honest, I think in the next 5 years, with the way that now regulators are looking at the blockchain or more, let's say, digital assets, I think that probably out of 20 top banks in the world, 10 will hold or trade digital assets in the next coming years, next 5 years.
Thank you. That's awesome. And Janet, to you.
Thank you. Conscious of time, so I will keep it brief. Really agree with the points from from all the panelists, but in particular, Jason. I mean, for me, it's about banks will need to really evolve to deliver intelligent services suited to individual customer needs. They need to stop thinking about products. They need to stop digitizing analog paper processes. They need to change their mindset and really think differently. I think we'll see a lot more of partnerships. It's been talked about for quite a long time, but I think this is the point where those partnerships will really start to come to the fore. And I think also we will see commoditization of some of the background services. So the core banking services, digital ID, banking as a service, they will play much bigger part. And potentially some of the big brands we have at the moment will become those providers of services and actually drift away from what they're doing at the moment.
Thank you. Thanks, Janet. And just final comments from me while we've got a couple of minutes. I was looking at Calvin Mann's comments here on the chat, which I think are really, really valid. So if I just wrap up where I see the future is, two big focuses. One on customer intimacy and experience, I think will be important. And as Calvin says, we shouldn't confuse that with consumers. We should think about customers all types, institutional, capital markets, corporate, etc. I feel as we move up the scale of organisations from consumer right up to large complex corporates and institutions, we tend to lack the understanding of really what customers want at the top end. So that's a big, big opportunity. Second, I think, is double down investment on data. I see a lot of what we have in the world at the moment as a data issue, getting the right data at the right time to the right person to make the right decision, whether that is approving credit risk and lending, whether it's making a call on liquidity or currency risk, or whether that is actually helping a consumer through their home buying experience. That seems to me to be the big opportunity that we need to double down on as digital professionals. And we need obviously fintech, payments providers, big tech firms, and obviously consultants to help on that journey with everybody. Final thought, digital identity, raising its head again. We have a real issue at the moment with people just not knowing who people are on the other side of the banking relationship, whether that's corporates or otherwise. For me, that seems to be a rich area of opportunity for us in the industry to be able to lead the debate on again, actually get that right this time. So Mark, I'll hand over to you just to finalise, but thank you very much for everyone for spending your time with us, whether you're in the mighty WeWork or out at RTGS or at Starling Bank. So Mark, back to you.
Great, thanks very much, everyone. That concludes today's FinTech Friday discussion. With special thanks to our guest panelists today, to Anton, to Janet, to Jason, to Ritesh and Marjan. Thanks so much for your time this morning. Really appreciate that. We've got a short 5-minute survey question, or 5-question survey after this. If anyone wants to fill that out, that'd be great. We'll be back here at the same time in 2 weeks' time, 15th of May, to discuss open banking and APIs. Enjoy the rest of your Fridays. Have great weekends on lockdown, and we hope to see you again soon. Thanks very much.
Thank you.
Thank you.
Thank you. Thanks, everyone. Glad to be here.